Each generation has defining moments or events that will forever shape their reality, their lives, and their perception of how they see the world. We live in a modern era, and for the first time in history, countries have begun to work together, and economies have become all interconnected. A black swan event occurred in 2020 when a global pandemic brought the global economy to its knees, created a global recession, and this occurred at the point in which countries became dependent on other countries as economies became interconnected. For the first time in history, central banks from various countries had to work together in order to be able to solve the complex economic issues that resulted from the recession. But that created a problem in itself, because what it meant was that any single central bank could impact the entire global economy by making a critical mistake. And that is precisely what happened. A single central bank made an incorrect assumption that would send ripples through the financial community, the Federal Reserve. The fatal mistake they made was that they incorrectly assumed that inflation was transitory, it would not persist, and therefore it required no effort on the part of any central bank to curtail inflation. In fact, I believe this incorrect assumption is at the root of all of the issues we have faced for the last 2 years. The chart I have just put up on the screen goes month by month and highlights the headline CPI inflation levels from June of 2020 up until November 2022. It also defines the exact moment when the Federal Reserve needed to act but hesitated. This is precisely when the Federal Reserve needed a small rate hike because it is much easier to reduce inflation at 2 or 3% than 8 or 9%. In fact, once it rose above 4%, the Fed had passed the point of no return. It is baffling to understand why the Federal Reserve ignored the data. While we will never know what was going on in the minds of Federal Reserve officials, they waited for another 6 months and watched inflationary rates rise from 4% to 8.5% in March of 2022. The Federal Reserve finally raised interest rates for the first time since 2018 by 0.25%. It would take another couple of months for inflation to reach a plateau at approximately 9.1%, hitting the highest level since 1981. The Federal Open Market Committee would meet on 6 more occasions and each time raise rates incrementally higher than the previous meeting, taking Fed funds rates from 25 basis points to 450 basis points, or 4.5%.